welcome everyone to the panel discussion.
Soyez les bienvenus à la prochaine séance portant sur la transition climatique.
Green, social, sustainable, and sustainability-linked bonds. It's a complex one, and sometimes we'll go into new territory, but we'll get there together. But before introducing my panelists that would help us do that, I will invite Edoh ONYANGO, the Senior Industry Specialist for Climate Finance at IFC, to make a short presentation that will set the tone for our talks.
Yinka, and thank you very much for the invitation to make this presentation. I'm not sure if we'll have the presentation up. Okay, so just we start with climate transition. African countries must invest more relative to GDP to decarbonize, to build low carbon resilient economies, and very important, without sacrificing the need for growth and at the same time delivering on shared prosperity. This is very clear. Studies have shown, and AFDB aggregated all of the funding needs for African countries to achieve their national determined contribution, and really estimated that Africa requires up to $2.8 trillion in order to deliver on the national determined contributions between 2020 and 2030. This is a substantial amount, and the challenge is that currently the flows, the financial flows, climate finance flows in Africa today are only about 30 billion annually, and that gives us a huge funding gap of over 250 billion on an annual basis. This is very challenging when you also consider that the continent continues to suffer from climate change that is reducing GDP from between 5 to 15% annually. This creates a huge gap, but at the same time, it's a gap that just keeps on widening. And so when we consider it, we have to think about what is it that we are going to provide and how are we going to meet this gap. IFC's own research has shown that climate business on aggregate globally can actually generate new business, up to $23 trillion of new business, and at the same time, be able to create 213 million new jobs, and in addition to that, support up to 4 billion tons of carbon reduction in developing countries. So this is a huge opportunity, but we do have a substantial gap within the continent. Going to the next slide. So there's a lot of information we try to put here, and I think the two things that I just want to point out is the fact that since 2008, when the European Investment Bank issued the first green bond as an instrument, the growth of that green social sustainability bonds and sustainability-linked bonds issuances has been on an exponential hockey stick growth. So far, as at the middle of 2023, we've had over 4 trillion in the market that has been issued in green social sustainability bonds and sustainability-linked bonds as well, instruments. However, on aggregate, as of 2020, including the 5 sovereign bonds that had been issued by 2020 in Africa, the total accumulative was only 4 billion. Again, that just points out the gap and the part of the discussion that we have today. So from our analysis, in order to really achieve this gap, private sector needs to be a major participant and in order to make sure that we do have participation. And public actors have the responsibility to create that enabling environment. Now, we're speaking about green bonds, but in order to, next slide, in order to have a fully decarbonized world by 2050, it's not going to be achievable by only focusing on green bonds or green assets. We really have to think about a huge systemic change. Widespread investment is required to transform entire businesses, business systems, entire ecosystem approach to manufacturing or transportation, as well as industries. So the whole decarbonization story is not just about assets. It's actually a systemic change in the way that we operate. And this is why climate transition finance is a key part of that conversation, and particularly if we think about African countries where we really do have some of our major economies across the country are very fossil fuel oriented, South Africa, Nigeria. And in order to address those countries' participation in that decarbonization story, you really have to think about a lot more financial innovation, the levels of capital that's required for that innovation, but at the same time, having a very clear consideration for the social protections, for the ecosystems where the livelihoods of individuals that are supporting that operation and that economy is also taken into account. At the same time, for the non-fossil fuel reliant countries, this is a major opportunity to bypass that fossil fuel reliance by creating new green economies and green economy jobs and opportunities as well. So what are the opportunities? With the next slide, what are the opportunities, especially for bypassing? One of those that has been spoken a lot about is in carbon credits. Already today, Sub-Saharan Africa is contributing up to 20% of the voluntary carbon markets credits in the market today. So Boston Consulting Group did this study and were able to confirm. And we know if you think about the natural capital that Africa has today, this could even be a lot more. And this is where Africa can really start owning the conversation of climate for the world, at the same time being able to monetize to support the transition for the continent. Already we're seeing some governments that are looking at different regulation. Kenya and Tanzania are looking at a carbon credit tax. South Africa already has a carbon tax with an offset system and managing that. Zimbabwe is actually looking to nullify some of the carbon credit agreements that have been in place and put in a 50% attribution to the government. So this is some of the considerations. But I'll just leave the thought in your mind with the words of President Ruto of Kenya at the launch at COP27 for the African Carbon Markets Initiative, where he said that carbon credits market can yield attractive income and development opportunities for communities at the front line in the fight against climate change. And I do believe that this is a really huge opportunity for the continent for us to also look at as a way of mobilizing capital. So to end today's expert contribution, I have a couple of takeaways on the last slide, and they're really very, very straightforward, and I think we all know this. Firstly, private finance is key to achieving these objectives. We have to consider what are opportunities to bring private capital into this space. Secondly, the right climate policies, including in carbon pricing, application of risk mitigants as transaction enablers, so things like guarantees on one side, securitization, warehousing that aggregates all different projects are quite crucial to make this happen. Thirdly, it's very clear, and I think this has been repeated throughout today, the market for sustainable finance in Africa today is growing rather rapidly. And the most important thing is investors are actually looking for investments with a positive climate impact. So the investors are interested. We've got to give them the opportunity. Innovation, and I think innovation has been repeated throughout the day today. Green bonds, sustainability bonds, social bonds, sustainability-linked instruments, all of these provide a huge opportunity for private and institutional investors as well. Lastly, we need to expand sustainable finance beyond green. And I think this speaks to the last point that we spoke about, making it a holistic approach for Africa that considers all the other SDGs as well, in order that we are addressing issues such as gender, health, inequality across the continent. And then the two most important inputs. Sovereign issuance in Africa has still been low. I think we only have 6 sovereign issuances. This needs to be stepped up because it does provide the baseline impetus for private sector, and at the same time, multilateral organizations have a significant contribution with the support that they would provide through innovative products as well as de-risking methodologies. Thank you.
Thank you so much for that presentation, Dale. You've given us a lot to work with as we enter our panel discussion. So I'll introduce our panelists, starting with Valérie-Noëlle, who's sitting here, and she heads Innovation and Sustainable Development at BOAD. BOAD has been a regional leader with the issuance of the kinds of bonds we're talking about. Then I'll invite to the stage Françoise Lombard, who heads Proparco, the investment arm of the AFDB group. And she's mostly representing DFIs on this panel. Then we have Dalia KADER, who is the conscience of Egypt's biggest private bank, Commercial International Bank, as its Chief Sustainability Officer. We also have Mustafa RAWJI, who leads the biggest bank in the Democratic Republic of Congo, Rawbank. Congo is also a country rich in the minerals that are needed for the global green transition. And finally, we have Frank Ajagba, who is the Group Director, Business Development for the African Guarantee Fund, which aims to help SMEs access funding and also become greener. Thank you all. Dale has set the stage by giving us 2 very important figures. So, he says $30 billion of climate finance coming into Africa annually, and the need is estimated to be about $250 billion, almost 10 times the amount. Africa has the natural capital. We have about 1/5 of forest cover. We have a lot of the minerals needed for the green transition. And there's also a lot of need. We're very vulnerable to climate issues. We've seen droughts and flooding. So why is it that we're in a situation where we're not able to unlock that capital? And that's what we're here to discuss together. But let's start with the successful examples. So, Valérie, maybe you'll start us off with the example of BOAD, which issued a sustainability-linked bond.
Thank you very much, Yinka. Thank you to all of you. Yes, as you explained, BOAD has issued a sustainable bond, $750 million. That has been, oversubscribed, 6 times. That shows, the success and the attractivity. It has been really appealing, to investors. So that's the great success. Something that needs to be said is that most of the portion of the issuance has been a refinancing of the asset that we had already, on our books, and the remaining, was fresh. Money, new money. Another thing as well, which is very important, to say is that The spread, that has been, accomplished, was the most, the best one that we can get, out of our traditional, issuance on the international market. So which means that, these typical asset was attractive, to the market. Something as well which is important, especially when we're talking about green bond, I would qualify this sustainable bond as a social bond. And it shows already, and it set the tone of the difficulties that we have to issue really green bond per se. And I remember that when, the investor, has been asking us to increase the amount, to bring additional assets, that was most origination, it has been a little bit of a challenge. So it speaks about, the difficulty, really, to find eligible assets that can qualify as such, as green asset. So, but it was quite interesting, to see as well who have been, the investors, which has been taking, the paper. So it has been split, between US, mainly, Europe. We had also, private banking as well, which is something quite interesting as well. So it's been a great success, and it's very important. The President Ekwe this morning was talking about concessionality. I mean, the challenge will be for us, to get access to concessional funding. So this sustainable bond, has been a portion of the issuance that we've done, on the market, on the refunding line that we have, from partners, and we try, to decrease the cost of funding in order to be able, for the people, because we are a development bank, to get affordable, funding. And I remember that my predecessor was talking about the carbon market, and we'll come to this after. Carbon market could add some concessionality, to the funding. And the NDCs, of our countries could attract, carbon market on specific condition, of course, and that can help, to bring, concessionality. So sustainability is just a portion of our old, funding strategy. Thank you.
Thank you. So we'll narrow it to the bond instrument, just because I really want to get more out of it. So Dalia, would you also speak about the experience of CIB? And specifically, Valérie talked about identifying eligible projects. Can you speak more about that and the work that had to be done to make your issuance possible?
Okay. All right. Thank you, Yinka. I'm delighted to be here in the African Financial Industry Summit, representing CIB, Commercial International Bank, Egypt's largest private sector bank, and sharing our experience with the green bond. Although we're present in Egypt, we have presence in Nairobi, and we're very much keen to engage with our peers in Africa and the ecosystem to unleash Africa's growth potential. The green bond experience actually has been an eye-opener. And the essence of my argument that I want to share with you all is the inherent power of African commercial banks to drive system transition within the continent. We usually think of policymakers, regulators, the top-down approach. Our experience testified the power of a commercial bank to drive real economy transition. Provided we redefine our role as banks, we need to redefine our mandate to shift from funding bankable projects towards establishing and building bankable projects.
So is that what you did in this instance? Did you actually build the projects?
Yes. And the second thing is redefining our relationship with MDBs. So when we talk about reforming the global financial architecture, we should not necessarily think of reforming Bretton Woods institution. It's reforming how we perceive our role as commercial banks here on ground in the continent, and how we manage our relationship with MDBs and regulators, and how we see our role as viable actors and driver of real economy transition. We're more than funding institution. So basically, our experience, I would summarize it in 3 lessons. The first is realizing the business case of sustainable finance. That was the premise. We innovated the green bond instrument, which was a new model at the peak of the corona pandemic, right? At that time, every bank and every corporate was wrestling to break even or stay there. But we said at times of crisis, you never stop innovating. And here, the green bond. In 2021, Egypt was the first nation in the MENA region to issue its sovereign green bond for $750 million. And it was successful. It was 5 times oversubscribed. At the same year, CIB was the first private sector bank in Egypt to issue the sovereign green bond, and it was successful. So the first lesson was the business case of sustainable finance. And mind you, Valerie, because we had this discussion, the green bond was mainly lent at commercial rates, more or less. It's the business case that we managed to drive to our clients. And to do this, we had to establish the infrastructure inside the bank. So this is the second lesson, the system transformation of a bank. It's never banking as usual. You have to go through a very robust process of entire system transformation. We conceived sustainable finance institutional pillars framework that includes 6 pillars: governance, policy and frameworks, system transformation. Within every department, you change policies, SOPs, data, capacity building, the whole system transformation running through each department. Strategy, sustainable finance, education, and innovation. So this is an entire system transition. You couldn't have done this without the support of the IFC. And here's the partnership. It was not the typical traditional bank MDB relation ticking boxes. No, it was real on-ground partnership, building products, sustainable finance products, providing capacity building for our employees and for our clients, which brings me to the 3rd pillar, which is getting our clients to go through system transition, because we cannot transform alone. The green bond actually established an infrastructure whereby we established our environmental social risk management system, evolved further to introduce climate risk, evolved further to issue a portfolio of sustainable finance products, and now being founding signatory of the Net Zero Banking Alliance, we're going through transition finance. So it is a very structured approach to change, and it is profitable. I mean, the win-win scenario is very much there. So this is our experience with the green bond. Thank you.
Thank you, Dalia. We'll move to Françoise, and specifically about monitoring this project. I know Proparco has a framework. Can you speak a bit about that and how you go from identifying projects, issuing your bond, and continue to report to ensure that it meets the requirements?
Thank you. Thank you, for the introduction. We have shared the figures, we have shared the global pictures, and the gap between the huge financing need and the very small share of the African continent on the GSS bond market. So we have the picture, we know the reasons, most of them. And firstly, I want to say that some of the reasons have nothing to do with the GSS bonds ecosystem. I mean, I don't want to pretend that issuing green, social, sustainable bonds will be the answer to the whole financing gap issues. This is not true. I mean, we are also dealing with political risk, forex risk, transferability and convertibility. So this is one thing. I wanted to just start by saying that. But among the reasons explaining that, we know there are also reasons that are closely linked with the whole GSS bonds ecosystem. A too limited number of GSS bond-friendly environments, that's what said before, even if some countries, I think, are really paving the way on the African continent, and a too limited number of issuers, be it financial institutions, of course, but also corporates. Why? Because for issuing green, social, sustainable bonds, you definitely robust frameworks, you need the processes, you need the systems to implement them, to monitor your portfolio. And I mean, the point about issuing green, social, sustainable bonds is to build confidence with impact-driven investors. So for that, you need to provide transparency, you need to provide robust data collection, you need a whole system. And I think that Dalia has insisted on that. This is not just a bond you are issuing once. This is a commitment and an engagement in the long run. So this is a very important thing, and I wanted to insist on that, of course. And of course, this is, I think, where development finance institutions like Proparco, like IFC, can bring value addition. I mean, most of development finance institutions have developed dedicated approaches for that, have developed dedicated technical assistance tools to accompany their clients, supporting them in going forward in that directions. For instance, at Proparco, we have a dedicated technical assistance tool to help the client. I mean, of course, screening the portfolio, defining eligibility criteria, reviewing the processes and the systems you need to monitor the portfolio and to deliver the reporting, which is key in that case, of course. To make recommendations on issuance location, for instance, you need that. I mean, I want to insist on the fact that there is no magic in that. There is know-how, there is expertise, and you have to work on that. Really, this is the key thing. So, I mean, we have deployed such a tool in several geographies, not so much in Africa. We have to do more on that, and I feel that there is, of course, room for that. And of course, one other added value from development finance institutions is that we are also investors. So, I mean, we can work on the downstream side. We invest also in those bonds. We did it in several parts of the world, in Africa, in Morocco, with BCP, with ABDEL in West Africa. I mean, also in China, issuing the first blue bond, for instance, of Qingdao in China. So we can also capitalize on what we are seeing over the world, and we can bring that to our clients. And this is, I think, the main added value today for development from development finance institutions.
And so we'll stay with you, Françoise, and from there, talk about scaling capacity. We have a few good examples, not enough, but at the continental level, is there work being done to scale the capacity to do something that sounds quite difficult?
Scaling means, I mean, of course, we need willingness, and willingness is there. Because I mean, you've shared the picture. The African continent have the assets to fill those portfolios, and this is the most important thing. I mean, to start issuing, I mean, I said you need robust frameworks, systems, etc. But what you need first is projects, I mean, eligible to those criteria. And so we are pretty convinced this condition is fulfilled. So you have the assets, and now we have to bring capacity building just to be sure that these assets are properly packed in a certain way, and it will create a good cycle. I mean, if the African financial industry brings more and more GSS bonds in the market, of course, there will be the incentive to have more projects to nurture those portfolios.
Great. I'll move to Mustafa to talk to us a bit about Rawbank's experience trying to identify those sorts of projects and just generally finding eligible projects for this sort of finance.
Indeed, it's working. So within the DRC context, I need to give you a little bit of a background picture. We have 70% of the Basin's rainforest. So the basin's rainforest that lies within the geography of the DRC is estimated to sequester around 1.5 billion tons of CO2 per annum. So what we're speaking of is roughly about 70 to 80% of EU's emissions. It's a huge natural asset that is driven by just the existence of this asset within the DRC. However, at this stage, when we look at it, about 2% of the DRC's rainforest is being destroyed every year, and mainly for cooking purposes. So you have this energy question for the homes. So this got our wheels spinning, and as Rawbank, we decided we needed to get in the forefront of this and figure out what strategies we could deploy to preserve this natural asset, as it's probably the single most valuable asset within the DRC when we're looking at natural reserves. You then, that sort of piqued our interest, so we eventually created up a carbon desk within the DRC, and we started filing in all these projects from eco-entrepreneurs that had a vision of how they were going to sort of solve this problem. As such, our journey took us to Nairobi, to the UNHCC, where we met with ACME, we met with all the other organizations such as JAP, and we started to see all of a sudden there's tremendous funding available. And on one side we have the projects, and then we can sort of see that the funding is available through all the various initiatives driven by ACME on the continent. So at this stage, we have about 14 or 15 projects that are undergoing due diligence. We're looking carefully to see how close they are to certification, and how we can finance these projects to guide them into certification and eventually get our funds back through the carbon offsets and selling the carbon credits on international markets or on local markets. So there is a few challenges that we're facing at the moment. And of course, the regulatory framework exists, but that's not a stopping block. I think at this stage, the big issue with African-generated carbon offsets is the integrity issue. And as such, we sort of have a very low selling price of these carbon offsets. And you try to say that, how do I make this project economical, given that the carbon offsets of this project will probably be sold at a price of $5, $8, or $10 per ton? Is that enough to create the virtuous cycle Because don't forget, if we're talking about forest preservation, it's those frontline workers that Ruto referred to in his quote that need to see the economic benefit of changing their way of life, of changing how they are going to create replacement for heating in their sort of livelihoods. So these are the challenges that we're tackling at the moment. What we'd like to see for future COPs, for the greater census to prevail, is this disparity between European markets and African markets, the compliance markets and voluntary markets, somehow need to all merge and mesh into what we need to consider as a global market, right? And until that doesn't sort of happen, of course, we can run the initiatives that we are running, and we're going to continue to do so. But the systemic shift of climate finance and sort of having African companies or banks at the forefront, these bigger stumbling blocks need to be removed once and for all, and the sooner the better. Because in order for us to channel the capital that we're talking about in an economical way, it needs to make financial sense for it to be sustainable. Otherwise, it sort of becomes in the framework of a CSR project that you do for your institution and for your social responsibility, but it's not sustainable and it can't perpetuate itself. So this is a key lever that we do need to address. At the same time, we have a pipeline of replacement projects, so replacement of energy projects. The DRC produces about 2 million tons of copper per annum, and there's a massive energy deficit in terms of hydropower. So at present, the mines are currently burning a lot of diesel and petroleum products in order to keep their big machines running. This indeed is not sustainable. So there's a pipeline of hydropower projects that will come on. And we've started to see that when you look at the bankable feasibility study of these hydro projects, as soon as you include the carbon offset revenue of that sustainable project, you start seeing that you get 20 to 25% increased revenue than just the sale of energy through the carbon offsets. So that accelerates the payback and allows the project to be far more bankable. And you can sort of monetize this shift of energy from what was diesel fuels and petroleum products into hydropower projects. So there's some neat opportunities that do exist in that specific field as well. Otherwise, we're forging ahead with our projects. We're continuing our due diligences. We're going to work with a few partners to ensure we get to certification and that we start this virtuous cycle and contribute to the betterment of climate change. Absolutely.
And just on that, so you do finance a lot of miners, and when you think of mining, you don't necessarily think of sustainability. Can you speak a bit to how you sit with that and how you position yourself to attract sustainable finance?
Indeed. So the DRC produces a lot of the critical minerals that we need for the energy transition. We're talking about copper, we're talking about cobalt. If you look at the next 15 years projections on the production and consumption of copper, we're looking at having about a 5 million ton per year deficit in copper production. So it wouldn't be wise of us as a bank to say that, oops, stop, no more copper production because mining is harming the environment. Without the copper, we don't achieve the targets that we need in energy transition. So what we do to this, we talk to our customers, we meet our clients, we try to coach them into what projects they're doing to becoming more sustainable and being mindful of the environment. I think we can say today that with global trends, with the ESG frameworks that are becoming far more important for all corporate citizens, there isn't much resistance on that front. And you generally will see that most of the large corporates that are in the mining space are very mindful of what they're doing. And they do have plans in place in order to sort of keep reducing their footprint and ensuring the social aspect of their business as well as the environmental. So I think I see it quite positively. Most of us flew here on a plane, and that plane was probably powered by fuel oil. But we all needed to come here to meet to talk about this, right? So there are the realities of life, but you try to mitigate and you try to guide our corporates and our customers in the right direction.
So it's also about greening rather than being green.
Absolutely.
Okay. I'll bring in Frank. This conversation has very quickly moved to carbon credits from bonds from the very beginning and even from the presentation that started the conversation. And I think part of the reason that is because it's actually really difficult. The context currently is very difficult. What can you do to de-risk and perhaps make the interest rates lower? What's being done in that space to even contemplate the idea of issuing more bonds?
Thank you. Maybe one or two comments before getting there. We saw in the first presentation that the financing gap between 2020 and 2030 for African countries, okay, to meet their commitment in the Paris Agreement is huge, okay? So we are talking about 2.8 trillion, and to do that, we will need the private sector and the public sector. At African Guarantee Fund, we are focused on the private sector capital mobilization and the bank capital deployment, okay? And so far, I can say that we are a real catalyst in this climate finance value chain, because one thing is to raise a green bond, but when you raise green bond, you have to deploy it, isn't it? If not, you cannot pay back the investors. To deploy it, one of the panelists or all the bankers say that here, you need projects that are ready, and at the bank level, you need to do a kind of a green transition in terms of process, policies, systems, okay? And at African Guarantee Fund, what we are offering two things, two solutions, I would say. The first one is the guarantee. So we issue guarantee for financial institutions so that they can all lend to these green SMEs, and they receive their money from people like BOAD. You know, BOAD, you raise 750 million green money. You have to channel this money through these banks so that they can support green projects. So two solutions in terms of guarantee. We can provide guarantee to the banks to raise funds, okay? So we'll give some comfort to BOAD or other investors so that they can give resources, green resources, with incentives to this bank. And we will also provide guarantee to the banks when they will be all lending to the green projects. That is in terms of guarantee. In terms of readiness, we also provide technical assistance, which is a package where we can assist or support the bank to do it, what I'm calling green transition, internal green transitions, in terms of people, process, system, by sharing the costs of this transformation. And we also give technical assistance to SMEs, green SME, to help them to be ready to use efficiently the resources they will raise from the banks. We also have, since 2016, with the support of Nordic Development Fund, a green guarantee, which is a specific product that we give to the bank with some incentives. Basically, we will take 75% of the risk that they are taking, so they will stay with only 5% of the risk, and we give a discount in the pricing. On top of that, we have starting doing each year what we call Green Finance Series, which is a series of conferences that we did from countries to countries to raise awareness, because it's good to say sustainable, bond, green, but what is it? What is, so we raise awareness, we try to talk to the regulator, how can they take into account in the risk-weighted asset, the green portfolio, okay? And we also give what we call, we capacitate, okay, the staffs of the banks. How do you approach a project in e-mobility, solar, when, you know, depending on the green assets, you know, the bank also need to be capacitated. Okay, so that's in a short the action we are doing to support the, what can I say, the value chain of sustainability, and we also the implementing agents of the affirmative finance of for women in Africa. We are talking. We say sustainable, not only green. It's also gender equality, and yes, we are pushing also this agenda. So I'll pause here. Thank you.
Valérie, I think you want to come in.
Actually, you've been asking me something, so I'm going to answer. But I mean, the thing that maybe I want to say is that you're right when you say that when we're talking about the green or sustainability, it's not only the book that we're having as a bank. So, I mean, I just want to also, you know, just to tell that BOAD has gone through a ESG journey. We had a program which is called ESG by Design, where we want to mainstream ESG all through, you know, I mean, the organization. So it comes not only on the kind of assets that we have on our book, but also it comes, I just want to give an example, you know, on the risk management side, which I think is extremely important. So integration of the climate and even, you know, biodiversity, but because now we're talking about a nexus, climate, nature. So we need to be sure that we integrated, you know, on our risk management, you know, I mean, sustainability. But sometimes, you know, we can look at the book of the financial institution and we're asking ourselves, what is the net worth of this institution? And people, you know, will give a price, and then suddenly, when you take into consideration the risk, you know, due to climate, you just realize that you are undercapitalized, and even, you know, that the pricing needs to be revisited. So this is something which is extremely important. So you're right when you say that when we're talking about green, it's a semantic world. It's not only about greening. We could even say to blue, you know, I mean, and that's the reason why maybe, you know, people have been talking about sustainability linked. I'm sure that the rating agency will become more and more stringent in terms of what will be called ESG, you know, I mean, transformation. So that's something as well, you know, which is very important. And
so sustainability linked is that it doesn't have, can you explain?
No, I will say that since, what is it? Because you say GSS plus.
Yes.
So sustainability will be, to me, you know, looking at the asset, you know, that you have on the book of an institution. Sustainability linked, you know, will be all sustainability things that you do on your institution, which means that, you know, when a rating agency will come just to look at the program, they will not only will be looking at the nature of your asset book, they will be looking at all the other things that you've been doing, you know, the ESG. And when we're talking about ESG, we're talking about the S, Because people sometimes said, what do we, if we have good environment with no people there?
Yeah.
So the S, will, for instance, the way we've been, approaching the S at the BOAD is towards, diversity, right, and health. Those are the things, those are the ODD that we've decided, to do it. Not only, for, the client, but also, for our own, employees, becoming responsible, employees. For instance, when we're talking about the ESG journey of the BOAD, we're talking about decarbonization as an own account, meaning, that even if we know that the own account of a financial institution represents only 10% of the, carbon footprint, it would help as a lead by example, meaning that if you want to encourage people, to go on the ESG, transformation, you need yourself, to do good things. So just to become consistent, and to be, true and genuine in the transformation that we are deciding, to go into. And I'm sure that you want to ask me another question about the market.
Actually,
was it a question? Okay.
I'll move to Françoise, just because briefly, we haven't actually spoken about investors. So I'd love for you to share about how are investors evolving and what actually are their demands, since we're talking about the S, the S+, the G. What generally are investors looking for, and how's that evolving?
Thank you. Yes, it's of course critical to understand the investors' requests and demands for issuing successfully GSS bonds, of course. So, since I am the DFI representative in this panel, I think what is interesting is that most DFIs are also relevant and even significant issuers on the green, social, sustainable bonds market. So we have the expertise internally. We are used to deal with investors' requests. For instance, at the French Development Agency group level, AFD raised a bit more than 13 billion euros of green or SDG bonds in the market over the past few years. And last year, it represented around half of the 9 billion euros financing of AFD in the markets, and we want this share, of course, to increase. So we have the contact with the investors, and we can help also our clients to understand the demands. So we are active on the issuer side, and this is key to support our clients, I think. You know, in 2020, when we set up the new SDG bond framework at AFD, so the mother company of Proparco, I was CFO of AFD, so this was a milestone of our roadmap. And maybe 2 lessons learned. First is that this is a huge work, and as it has been said before, this is a holistic approach. This is not only an issue of the legal of the financial department, definitely not. So this is a lot of work, and you have to think in the long run, because if you want to be successful, I mean, maybe you will issue once, but I mean, you want to engage in that approach, and if you are not enough engaged, you will not issue twice, because the confidence will be broken. And I mean, you have to think also about what you don't get through issuing GSS bonds and what you get. So far, what we don't get, naturally, unfortunately, is you don't get really a pricing premium. I mean,
Yeah.
and you don't get so far capital relief. I think it will come, but so far you can't have those kind of incentives. So, and what you can get is, first, I think you can get a diversification of your investors base. And this is key to face, I mean, when the market conditions are not so good, you have to think about that in the long run. So diversification of your investors base. You can definitely get the operational risk down, and this was also said previously, usually you are oversubscribed when you are issuing those bonds, and this is key when the market conditions are not good, really. And thirdly, what you can get is longer tenor. Okay, and so you have to be focused on those objectives. Because sometimes you feel a bit, I mean, overwhelmed, but what you have to do to change in the organization, so you have to stay focused on the incentives. Of course, for a group like AFD, it was pretty obvious we wanted to bring more consistency between assets and liabilities, but you cannot just only say this is only an incentive. You have to be focused on the incentives. And one last thing is about sustainability-linked bonds, because you've mentioned it. I think it's a very interesting approach, because it is a more proactive approach for an organization. I mean, it is not only about having the right portfolio at the right moment to be refinanced. This is about setting targets for the organization, setting an engagement. So a broader and a more dynamic approach to ESG.
Thank you so much. The time is running away, so I'll see if we can take a couple of questions. It will be really brief, unfortunately, but you can also approach the panelists after. Do we have a question from the audience?
Good afternoon, Stephen Gray from UK Export Finance. Could anybody tell me what's happening regarding the securitization of carbon credits as a way of unlocking capital?
Does anyone want to take that?
On the carbon credit?
Securitization.
Of the carbon credit?
Yes.
I think it's a very interesting question. Considering, that carbon credit, is looked as a new kind of asset, even a commodity. So we can look at, securitization as a commodity, but in order to do so, we need, and we've discussed it, when we were at the West Africa carbon market, in Côte d'Ivoire, about, what is needed in order to attract investor to the market. So you need transparency and integrity.
Yeah.
I mean, that's if you want to make any securitization, you need that. You need as well, to get a good pricing system, for the carbon. And we can see there's a lot of a discrepancy on the carbon credit. If we're talking about the voluntary market, or we're talking about, Article 6, carbon market. So, and there's been a lot of discussion. So we need to give a proper framework of, the carbon market, just to prevent, speculation. Because people, may ask you, well, that was a question, that was asked, to me, at BOAD, because we're trying, to develop a carbon franchise. People will tell me, Valérie, carbon market, the price is zero. It doesn't, there's no market there. So there's no price. And they say, and I remember that we have the old story of the CDM under the Kyoto Protocol, where, at some stage the market was disrupted with no, pricing. So people are just a little bit reluctant. So we need to give confidence just to explain to the people that's the real market. You need as well to get a place where we can hedge, the volatility. So there's been discussion about, is there any, terminal market or any, future market, for the carbon. So those are the prerequisites in order to have a proper securitization, program on that.
Thank you. Second and last question.
Can I?
Oh, because we have.
Hi. Thank you for your ideas in the panel. It was mentioned by Mrs. Lombard that there is no particular incentive in terms of economics if, let's say, as a lender, we target green financing. In Africa, I would say it's a bit unfortunate because we would be able to deploy much more green loans if it came at a lower cost of fund, for example. With that in mind, how do you think we can better incentivize African financial institutions into the issuance of green loans or, other green financing instruments? Thank you.
Thank you. I think we have started doing that by providing a guarantee when Rawbank, for example, or lend to one SME, African Guarantee Fund will keep 75% of the risk, and Rawbank will keep 25% on her balance sheet, okay? And on top of that, we will give a discount on the guarantee price, okay? Plus, if Rawbank realize that the SME needs any support in terms of technical assistance, we can also come in and share the costs. Yeah.
Sorry, we're running out of time, so I really hope that you mingle. But I'll just end by doing a quick takeaway. There's been some growth in GSS plus bonds, but it's not easy. It's also a very difficult context. We're not getting the price benefits yet, but there's a long game to be played. That's what I'm hearing, and it's a holistic one, not one where we just look at cheap financing, but really have to transform our organizations. If we do so, ultimately the goal is really to green our economies. So it's definitely something worthy of continuing working on. Thank you so much to my amazing panelists for your contribution. Thank you to the audience for staying late to listen to this, and thanks to the organizers. Thank you. So please don't leave. We have a conversation, which is a fireside chat with the director of the BRVM, Felix, Edoh, AMENOUNVE. We'll be talking more about climate finance from a regional perspective and from a stock exchange perspective. Thank you.